As Yuka Rose joined us, a very good evening to you.
Hi, Mark.
The European Central Bank's decided to cut interest rates for the first time in nearly 5 years.
Yes, by 0.25%. Now, the move was widely expected, but it's still significant as it's the first time since September of 2019 that the central bank lowered its policy rates. The main refinancing rate, which is what banks pay when they borrow money from the ECB for 1 week, will be reduced to 4.25% from June the 12th. The overnight borrowing costs will be 4.5%, and the closely monitored overnight deposit rate, which banks use when they park their money at national central banks, will be 3.75%. Only 2 years ago, this rate was negative to encourage banks to lend more to businesses. But as the economy rebounded after the COVID-19 crisis, while supply disruptions and the war in Ukraine caused prices to spike, the central bank raised rates 10 times to a record level and has kept it there until now, Mark.
So does this mean that the fight for inflation is over for the central bank?
No, it's far from over, Mark. The latest figure for the Eurozone showed prices were still up 2.6% from a year before. The ECB now says it no longer expects it will hit its 2% target next year, but will stay around 2.2%. Wage growth is also strengthening. The US Federal Reserve has cautiously kept rates unchanged thus far. Inflation has come down, though, a long way from its peak of 10.6% in October of 2022 and dropped below the interest rate a year later. But it's still high enough not to expect rapid consecutive decreases in policy rates. Here's ECB Chief Christine Lagarde speaking earlier today.
We are not pre-committing to a particular rate path. It is the dialing process that is underway. There's a strong likelihood, but it will be data dependent. And what is very uncertain is the speed at which we travel and the time that it will take.
Straight from the horse's mouth there. Christine Lagarde herself. How are the markets reacting to the latest move? That is the question. Yuka.
Mark, European shares closed higher, boosted by financials and healthcare stocks. Investors welcomed the ECB's expected rate cut, although uncertainty remains on the bank's future moves. London, Paris and Frankfurt all gained about 0.4 of a percentage point this Thursday. Wall Street, though, is more muted, with the Dow flat and the S&P and the Nasdaq actually dipping into the red. This as chip maker Nvidia stock pulled back, currently down 2.5%. after it hit the $3 billion mark in market value, overtaking Apple.
Now, the European elections are upon us, and as Europe goes to the polls, work, housing and the cost of living are key concerns for people all across the continent, aren't they?
Yeah, well, we're going to have a look at Ireland as an example. Many young doctors there and teachers are leaving for countries where they can afford a better life, in particular Australia. More than 500 are expected to emigrate this year, causing a shortage of medical professionals at home. Leo McQuinn has more.
Kate is a young doctor working in the town of Tullamore. She's just one of hundreds in the profession that will emigrate from Ireland to Australia this year. According to Kate, the working conditions in her home country are much worse than down under.
It's longer working hours. I wouldn't say the pay is necessarily bad. It's just in Australia you'll get the same pay for doing less work. All of my friends are going, so I'd have maybe 15, 20 close friends going. For my graduating class, there's maybe 40 or 50, maybe more going.
The number of young medics emigrating to Australia from Ireland is on the rise. According to one survey, 73% of medical graduates were considering emigrating when they qualified.
So this year, 535 Irish doctors emigrated to Australia, or got visas to work in Australia. And that's quite a significant number relative to the number that Ireland trains. Ireland trains about 750 doctors each year.
The shortage of doctors has meant that 3/4 of GP practices in Ireland have closed their lists to new patients. The cost of living is another driving factor behind the mass exodus. Prices of goods and services in Ireland are 46% above the EU average, and it's not just medical professionals who are quitting Irish shores. Teachers are also leaving in their droves, with 3,000 posts currently vacant. There is estimated to be around 27,000 Irish people currently in Australia, with over 20,000 of that number under the age of 30.
It does look inviting, doesn't it? Yuka, thank you very much indeed. Yuka Roya there with all the business. More from Yuka throughout the evening, so don't be disappointed if you've just come on the end of that one. She'll be back very shortly. Thank you very much indeed.